Hello, in this lecture we're going to take a look at some test type problems. These are going to be smaller types of problems that could be in the format of multiple choice questions. We're not going to have multiple choices in these examples, but these are smaller types of questions that can be in a multiple choice format, and we'll have, because of that, restricted information. We have less information usually when we think about these types of problems, and therefore, in order to work these, in order to practice them, as well as if you can on a test, I would have a cheat sheet available, and that cheat sheet would be something like a trial balance. A trial balance. So notice this over here is a practice problem. It is not related to these problems over here. However, I'm just showing that it's good to have something open that you can reference to, like the accounting equation up top and as well as the trial balance down below. It'll tell you which accounts are debits, which accounts are assets, which accounts are liabilities, which accounts are equity. So we'll have that open as we work these problems on this side over here. So let's start off with this. We got the cash account had a normal balance of $5,600 during the month. The account was debited for $12,800 and credited for $12,100. What was the balance in the cash account at the beginning? Notice it's a bit tricky. We're talking about at the beginning, and so we're going to have to back into the beginning number. Once again, this is unusual. This isn't what we normally do in the accounting process, and that's the nature of multiple choice questions. Often we have to back into numbers and get into the answer a little bit backwards, which really tests our knowledge, but it is not the normal process that we often do. So we can think about this a couple different ways. I'm going to think about it with a T account, and we have a T account for cash. That's like a general ledger account. First, we can look over here and say, well, cash, does it have a debit or credit normal balance? We're going to need to know that. We can see that cash is an asset because it's up at the top and it's in the green area. And I'm representing assets in this trial balance with non-bracketed numbers, as opposed to the liabilities have bracketed numbers, rather than having a debit on the left, credit on the right. That's how I'm recognizing that. So I'm recognizing that cash has a normal debit balance. So therefore, we're going to have our debits on the left and our credits on the right. I'm going to put this into Excel. This is one problem that may be easier to write out by hand, but I'm going to practice putting them into Excel. Again, I think it's good practice to try to put them into Excel and use formulas, and then take that same type of format and then do it by hand if you need to during whatever format of test that we are taking. So we're going to take this. I'm going to put a line underneath it just to emphasize the T account, and then I'll make a T on this side as well with a line on the left. So then we have, so I don't know what the beginning balance is. It's a little bit tricky. Remember, they're kind of tricking us there. They're telling us this 5,006. That's the ending balance. So we're going to end up with a debit because it's a normal debit balance of 5,600, and we need to know what the beginning number up here will be. So then we know the activity that it's going to happen. It's going to say that we debited 12,008, so that's going to be on the debit side during the period 12,800, and then it was credited 12,100 during the period. So during the period we can say negative. I'm going to make the credits a negative. You don't have to, but I'm going to make the credits a negative 12,100. And that's the activity. So if we were just to add up the activity, of course, we would have the 12,800 on the debit and the 12,100 on the credit. The difference between those two would be this, the 12,800 minus the 12,100 is 700. So what we have to do then is say, well, what do we have to start off with in order for an increase of 700 to get to the ending balance of 5,600? So we can do that in like a formula. We're looking for this number. This is the beginning balance, kind of like that's X. And we're trying to see, so X went up by 12, well, let's just say 700, the net, the 12,800 minus the 12,100. And that's going to have to equal the ending balance, which we're going to say, make that a little 5,600. So that's our account, that's our equation. We're looking for X, the beginning number, so that something plus 700 equals the 5,600. That's our algebraic equation. We can now subtract 700 from both sides. So we'll say 700 minus here, 700 here. So now we have X plus 0, because we're saying this is 700 minus 700 equals, and then we're going to say this equals the 5,006 minus, I'm going to do this way, the 700, and enter. So notice that I used a plus sign because I have a negative here. So in the formula it says this cell plus a negative, but we know it's a subtraction problem. We're saying it's 5,600 minus 700, and therefore we're just saying X equals the 49. So that means that this needs to be 49. And we can kind of test that out. We could then add up our debits and add up our credits and see how much the debits are winning by. We're hoping they're going to be, the balance is going to be this. So we're going to say, okay, well, if we add up our debits, the sum of these, the 4.9 and the 12.8 for the period, the beginning balance, plus the debits during the period, we add up the credits. That's what we have for the credits. And I'm going to draw a line under here so we can see that these are the totals. And then we're just going to subtract that out. So the 17.7, I'm going to say plus the negative 12.8. So in a calculator, 17.7 minus 12.1, sorry, 12.1 will give us that 5,600. So this is the balance here. So the answer in this case would be the 4.9. That's what we need to start with, to back into, in order to see this activity end up with the ending balance of 5.6 that was given in the problem. All right, the next one says, received a telephone bill in the amount of $340 and immediately paid it. General journal entry to record this transaction will include a, and I put this in there because note that we can have 4 answers in terms of a multiple choice question. They could say it's going to debit this, it's going to credit that, and only give us half of the transaction. And sometimes they won't even give us the number here. They'll just tell us that there was a dollar amount. And people often make errors because they don't write the journal entry down. So no matter what the multiple choice questions happen to give as an answer here, first write the entire journal entry down. So if we're going to think about this, we're going to write the entire journal entry down, then look for the answer that correlates to our journal entry in some way, either the debit half or the credit half, or whichever is given to us. So received a telephone bill and immediately paid it. So that means I would go through this by saying, is cash affected? If we immediately paid it, then we're going to say, yeah, cash is affected. So therefore, cash is up here. It has a debit balance, and we paid it, and therefore it's going to go down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to say we're going to credit cash, and I'm going to put that on the bottom. I'm going to say cash is going to go down. I'm going to put that on the credit side. I'm going to represent the credits with a negative. You don't have to, but I'm going to represent them with a negative in Excel. Then we're going to debit something. We need to have an equal number of debit and credits, of course. All right, and then the debit is going to go to, what do you think? It's going to be probably not an asset, liability, equity, some type of expense, and it's going to be an expense in this case. It's going to be telephone or phone or something like that. And, they might even put it into utilities expense or something. And notice I don't have that over here. I have a utilities expense over here because this is just an example problem. Doesn't tie exactly to here, but it does give us a general idea of the type of accounts. So we do see like a utilities here, and we can see that that could be a way to categorize it. Note again also that it depends on the bookkeeper as to whether it would be telephone expense or utilities expense, or cell phone versus a different type of phone, and phones by region. So it could differ. And the problem, when they give us the problem, we're gonna have to pick obviously the best answer. If they gave us telephone expense and a debit, that would be the best answer. If they gave us telephone expense and a utilities expense, well, it's possible that they could put them in either one, but telephone would probably be the best answer. Where people often make mistakes here, of course, is that they put telephone expense, but the problem doesn't give them the second half of cash, and they put it as a credit. And that's, of course, wrong. It's going to be a debit to telephone expense. And if you write both sides of the journal entry, that becomes clear. If we do not write both sides of the journal entry, and we just try to look at the answers and answer it without an actual journal entry, that makes it a lot more difficult of a problem, actually. Next one says, received $1,260 cash from customer for services to be provided next month. Given the choices below, determine the general journal entry that the company will make to record this transaction. Again, if this was a multiple choice question, they could have asked us just for half the journal entry for one of the debits or the credits. We want to write the entire journal entry out every time. So we're going to write the entire journal entry out. And for this one, first thing I would generally ask is cash affected. And yep, we received cash, $1,200. This is a different trial balance, but it gives us an idea of the types of accounts that are here. And cash, we can see, has a debit balance by the fact that it does not have brackets around it. And we got more of it, therefore it's going up. How do we make something go up? We do the same thing to it as what it is. Cash is a debit. We're gonna debit it again to increase cash. So I'm gonna say this is gonna be a debit. So on the debit side and credit side, and we're gonna have 1260. We need an equal number of debits and credits. I'm gonna represent the credit with a negative number. If we debit something, we're also gonna have to credit something. What's the credit going to go to? Normally when we get cash from customers, we would credit revenue or income or fees earned, something like that. It's some type of revenue account. However, in this case, we have not yet done the work. We got paid before we did the work. We got paid, we're gonna do the work next month. Remember, the difference between cash and revenue is that cash is the form of payment, an asset, versus revenue, which under the accrual basis represents us actually performing and earning the revenue. So in this case, we didn't earn it yet. We got money for something we're going to do in the future, and so we can't credit revenue yet. What we have to credit then is going to be a liability. And notice it's not in here. We don't see this. We see a liability accounts payable, but we don't see the liability that we're going to use because we're not using the same trial balance. But we can see that the liabilities have credit balances, and we can see that if we credit something, it's going to make the credit balance go up. So that kind of makes sense. We're going to call the liability unearned revenue or something of that nature. Unearned income, unearned fees earned, unearned fees, or something like that. That's what the credit's going to be. And note that the different bookkeepers, different problems, different types of companies may word it slightly differently, but the concept of the accrual concept will always be the same. That concept being, we haven't earned the revenue, it's got to go into some type of liability. Cash will be on the debit side. We're going to have to credit some type of liability. Why? Because we owe this in the future. We owe either the money back or the work that we promised to do for the money that we received. So next one, we have on May, a client prepaid $69,000 for 6 months services in advance. The journal entry to record this transaction will include a. Now, if this was a multiple choice question, remember, it could just have the debit. It could just have the credit. We want to write out the entire journal entry because that'll help us to verify that we have the debits and credits correct. And then we can choose any kind of multiple choice answer if it were a multiple choice question that is in alignment with the journal entry that we create. So we're going to have first, I always ask, is cash affected? I'm going to have a journal entry. Remember that this is not related to this problem, but the trial balance is often good to look at. So I would always have one open as a cheat sheet as much as you can to get used to seeing whether the accounts are debits and credits and whatnot. So cash in this case is affected. It has a debit balance represented by the fact that it does not have brackets on this trial balance. And in this case, we got more of it. So we're going to make it go up. So I'm going to say cash is going to go up. So that's going to be the debit to cash. We make something go up by doing the same thing to it, which in this case would be another debit. So 69,000 cash. Then we're going to credit something. I'm going to put the credits in as a negative. You don't have to, but I'm going to represent them as a credit. And what are we going to credit? Now, if we did the work today, then we would have earned it, remember? And that would be going the credit to revenue, income, fees earned, something like that in the revenue account. And that would be the credit increasing revenue. However, even though we got cash this time, under the revenue recognition principle, we can't recognize revenue until we do the work. Therefore, we can't credit revenue, and then we're going to have to credit something other than that. That's going to be the liability. We don't have the particular liability here on this particular trial balance that we are going to credit, but we do have accounts payable, and we could see accounts payable as a credit balance. So we're going to increase the credits by doing the same thing to it, increasing it, and the account is going to be what we call unearned revenue. Now, they might call it unearned income. They might call it unearned fees. That depends what we name our revenue account. And note that if you were then going to pick an answer, if they said we need to debit cash, then that would be a correct answer. If they said we need to credit cash, that would be tricky, right? Because you'd have the debits and credits mixed up. They would probably ask in this question, what's going to happen to unearned revenue? I'm sure one of the two options will be debit unearned revenue, and one of the two options will be credit unearned revenue. And if you write the entire journal entry out, that will really help to get it going the right way. So next one says company received $2,350 from a client billed in a previous month for services provided. Which of the following journal entries will the company make to record this transaction? So once again, if this was a multiple choice question, they could give us multiple, different formats of the journal entry, and they could have asked it in such a way that we would only have half the journal entry instead of the whole entry. We always want to write out the entire journal entry. So the company received. So the first thing I would ask is cash affected, and in this case, we received $2,350. That would be cash that we received. So cash is up here, and it's a debit, has a debit balance. We got more of it, therefore it needs to go up. How do we make it go up? We do the same thing to it, which in this case would be a debit. So we would debit cash. I'm going to debit cash, and that would be on the debit side. So we can put debit and credit here. Credit. And we would have 2350, and then we're going to credit something. And note, once again, if we did the work today, the credit would be going to revenue or income or fees earned or something like that. But in this case, we did the work sometime in the past, and we already billed the client, meaning we sent out an invoice, our invoice being a bill to the client, and they then sent a check in to us. So we have to imagine what that last transaction would have been before we can really figure this one. That last transaction would have been when we made the invoice, would have been that we did the work at that time, and therefore we recognized the revenue at that time, and we debited the receivable, accounts receivable. So now we have this receivable on the books, and that is what's being paid off. So we're getting cash, and we're paying off, in this case, the receivable, accounts receivable. So the credit's going to go to accounts receivable, reducing accounts receivable. Why? Because accounts receivable is an asset just like cash. There's nothing in it in our example problem here, but of course if we were talking about a trial balance in relation to this problem, there would be something in accounts receivable. Note this is just a practice trial balance, and it would have a debit balance. People no longer owe us that amount of money because they paid it, therefore it needs to go down. Next one says the company has the following accounts and balances at December 31st. So we've got like a trial balance here. So we have the accounts, and we can even make this a little bit, make it look like this. So here's our accounts here. And so we have cash, receivables, prepaid, supplies. Those are all assets. Then we have our liability. They're not representing the liabilities with credits like I am over here in our trial balance with brackets. I mean, they're not representing the credits with brackets. They're putting in the credit column. So keep that in mind, that they could be represented different ways in different areas. And obviously they're not going to be in different colors when we're on a test or something like that. So then we have the credit over here of capital, and then revenue as a credit, and expenses. So what are they going to ask us here? And of course, this represents total debits. If we added those up, adding up to 21,730, and the total credits adding up to 21,730. So the question being, using the information in the table, calculate the company's reported net income for the period. All right, so net income, in order to calculate net income, we just need to recognize the income statement portion of the trial balance. So remember, it's always in order. Assets are up here, then liabilities, then capital or equity, and then this is the income statement down here, revenue and expenses. That's what we need to use to calculate this. We calculate net income by revenue minus expenses. So if we were to make a little income statement down here, it would be service revenue. I'll just copy this. Service revenue, I'll put that in the outer column. These are not debits and credits, but I'm just going to subcategorize it the way we would if we were making a income statement. And then we have expenses, and the expenses are going to be the salaries expense and utilities expense. I'm going to pull them into the inner column, not because they're debits in this case, even though they are debits, but this isn't a debit and credit column. This is a sub column, bringing the expenses inside so that we can then have total expenses that we will then bring to the outside. So what we're doing is we have a sub column here. I'm going to represent that by indenting. So we indent that one time, and then I'm going to bring this out here and then sum these up. Total expenses then are those two numbers, 730 plus 1460. That means that net income is calculated as equal to revenue 93 minus total expenses 2190. Now, of course, if you were doing this quickly with just a calculator, obviously you would just say, well, I have revenue of 9300 minus the expenses of 730 minus 1460. That gives us net income of 7110. So the next one we have on April 30th, company had an accounts receivable balance of 26.8. During the month of May, total credits to accounts receivable were 61.6 from customer payments. The May 31st receivable balance was 21,000. What was the amount of credit sales during May? So we can do this with a T account type of account, a general ledger tracking the transactions by date in this case. So we're talking about accounts receivable. And again, if we look at a trial balance, we see that that's up in the asset area, meaning it's going to have a normal balance of a debit represented by no brackets here. So let's make a little T account. If we made a T account for accounts receivable, I'll just enable accounts receivable like that. And then I'm going to center this across like so. And then of course we have the debits and credits like so. And then we can, if we want to just emphasize the fact that this is a T account, we can make it a T account like this and highlight the effect of a T in the account. All right, so then we're saying that we had a beginning balance, and it's going to be a debit balance because they don't tell us it's a debit balance, but we know it's an asset, and assets have debit balance, so we got 26.8 at the beginning. And then during the month, we had total credits to the account. So I'm going to put the credits, I'm going to skip a line because normally we get, we would have receivables and then the credits. So what happens in accounts receivable normally? We make sales, meaning we send out invoices and bill clients, and then they owe us money, increasing the receivable. And then, of course, the clients send a check in the mail, and we get the check, and the receivable goes down. So in this case, they're giving us the second half. They're giving us the fact that the receivables go down, the amount of checks we got in the mail, the amount of payments we received. So when we receive payments, we debit cash, and we credit the receivable. So we're going to do that here. So during the month, total credits, and they actually totaled it was credits. They might have just said it was payments. So we have a credit. I'm going to put the credits with a negative, 61.6. You don't have to. You can put it just on the other side of the T account, but I'm going to put a credit in there. And the question is, how much do we have on sales on accounts, I'll say. So how many sales did we make and bill the client? That's going to be basically X. So notice we're backing into it like we do in a mini multiple choice questions. This may not be what happens in real life. We probably would know that number in real life, but backing into it helps us to kind of conceptualize things. That's why these smaller problems can sometimes be more tricky, and they actually gave us the end balance. Normally we would be calculating the end balance, right? Now we're going to know the end balance and back into the sales amount in this way. So they're going to say that the ending balance, I'm going to say ending balance, is then going to be, we'll put that down here, a debit of 21,000. Why is it a debit? Because, again, it's a normal balance of 21,000. So we started with 26.8. We don't know how many credit sales we had. Those are going to be sales on account that we got sales and we billed the client. We don't know that. But they did give us how much the clients paid us, or customers or whatever, paid us by checks in the mail on account, and they gave us the ending balance. So we need to solve for X. So notice what we would have here is the debits minus the credits needs to equal this. So the debits are this plus this minus the credits of this needs to equal that. So we could kind of net this out. We could say that the 26.8 minus the 61.6 plus X equals 21,000. That's a way we can write this formula. So we could say we have debits that are known of the 26.8 plus or minus the negative of 61.6. So we actually have a credit of 34.8. And then we want to say plus X equals, and it's going to end up to be 21,000. So then we need to subtract out from both sides, or in this case add from both sides. That's going to be a negative number. The credit's going to be a negative number, so we're going to say 34.8 on both sides to get X by itself. So this equals the 34.8 plus the 34.8, 0 plus X equals, and then we're going to do the same thing over here, 34.8, And then we're going to say this equals the 21 plus the 34,800. So 21,000 plus 34,800. 8 is 55,800. Therefore, X equals 55,800. Let's see if that's the case. I'm going to make this green. That's what we're looking for. That then equals 55,800. And let's add these up now and see if that's the case. Are the debits beating the credits by 61,600? So let's recalculate this ending balance here. So I'm going to draw a line underneath these in our T account and sum up the debits. So if I sum up the debits, that's the 26,800 plus the 55,800 equals the 82,600. Sum up the credits is obviously only the 61,600. If we subtract that out, then the 82,600 minus the 61,600 gives us 21,000. So this minus this gives us 21. Debits minus the credits gives us 21. So when you see something like this, you want to basically, the T account can help a lot. You can put it on the T account, look for that missing number, and then basically you're just kind of trying to figure out, okay, what's got to be in that missing number here in order to end up at the ending balance. Often it's easy to try to write that out in an equation. You could have written the equation a bit longer too. You could have said, instead of, I kind of took a shortcut, you could have said that it would be the 26,800 plus the unknown X, which is green now, minus the 61,600 would then equal 21,000. And then if you plug it back in here, that will then help you to see if you have it right or not. Next one, we have a company provided 250 dance instruction and rented out its dance studio to the same client for another 150. The client paid immediately. Identify the journal entry below that will record the transaction. So once again, if this was a multiple choice question, we'd have to watch out for the journal entry being kind of mixed up. The debit's not being on the debit side of the credit. You want to write it out first before looking at any of the journal entries that would be in a multiple choice answer. So you just think through it, write it out first, and then look at the answer. So we could say, okay, the company provided first I would always ask, is cash affected? And here it says that the client paid immediately, meaning paid with cash immediately. So what we did is we provided dance lessons and this rental, and they paid us for both of those apparently immediately. So cash is a debit balance represented by the fact that it doesn't have brackets over here. That's just our practice trial balance, and we know that it's going to go up. Therefore, we're going to do the same thing to it, which in this case would be a debit. So I would just write out the journal entry. We're going to say it's a debit, and then we have credits on this side, and the debit is going to equal 250 plus 150. 250 plus 150 is 400. Then the question is, what do we credit? Well, it looks like we did work here for the company provided dance lessons. So, and we've done the dance lessons. We provided those dance lessons at the same time that we got the money. Therefore, under the revenue recognition principle, we have then earned it at that time. So revenue over here has a credit balance. So we're gonna credit some kind of revenue. So we could call it income. We could call it revenue. They might call it instruction revenue. To differentiate. Remember, all we're doing is trying to put our accounts as a bookkeeper in a way that makes sense. Now, if all we did was instruction, obviously we could just call it revenue. We could call it services, and that would still be the same kind of thing. So whatever we name it is kind of the convention of the business. However, we know that it's going to have a credit balance because it will be a type of revenue account, and therefore it's going to go up in the credit direction with another credit 250. And the second one, also revenue, we earned it. In this case, we earned it by renting out the studio. So again, we probably are going to want to differentiate our revenue, and in this case we're going to call it maybe rental revenue. And again, as long as it's revenue, it has the same effect on net income, meaning it's increasing net income, but we probably want to differentiate what amount of our revenue is coming from of the instruction versus the rental. Of course, the 250 plus the 150 then equals the 400. The debits minus the credits would then equal 0. We are in balance. So remember, draw it out before you start looking at the answers, because it's really easy to see the answers in a bit different order and think that they're right. And they look, it's in balance, it's got to be right, right? Well, it's going to be out of order, obviously, if you're looking at a multiple choice question. So make sure to write it out first, think it out, and then if you don't see the answer that you wrote out, then you're going to have to go through it and think through it again on it. So next one, we have opened a store on January 1st, the current year. During January, the following transaction occurred and were recorded on the books. And then here's all the transactions. I'm going to read what we want to do first. I'm going to skip over all these transactions and look at this last column just to see what we're going to do. And then hopefully that'll save you some time when you're going through the test. So we're going to say, okay, based on this information, the balance in the cash account at the end of January would be. So before I read all those, I'm going to say, well, I'm focusing on the cash account. So we could do all the journal entries, or we could just try to do the T account for the cash account. I'll try to do both of them here in a bit so you can see both sides of the journal entries. Sometimes writing out the entire journal entry, of course, will help us to get the journal entries correct. But if you're in a time constraint, you just might want a T account and try to figure out what happens to cash. So we could say, okay, this is cash T account over here. So I'm going to say this is the cash T account, kind of like a general ledger. A T account is a general ledger account for the most part. And we're going to say we have a debit and a credit. And I'm going to make it look like a T just so we can emphasize the fact that it is a T account, like so. So we're going to emphasize the T-ness of the account over here like that and that. All right, and then we can go through these transactions. So first, the owner invested $14,700 cash in the business. So if we thought about the journal entry, I'll do the journal entries just so we can look at both sides. But again, obviously we're focusing on cash. So is cash affected? Yeah, the owner, they put cash into the business. So cash is going to be debited. So we're going to say cash went up, and that's going to be for $14,700. We're going to credit something. In this case, the credit would go to the capital account, the owner's capital account. The owner's the one that put it in there. But we're concerned with cash. So in our T account, I'm just going to say that's that debit of $14,700 to cash. The next one says owner contributed $32,000 of photography equipment to the business. Now, so is cash affected there? No, it's not. But if we want to look at the journal entry, it would be equipment, just to make sure that cash is not affected. We need two accounts. Equipment went up by $32,000, and again, the owner put it in there, so we owe it back to the owner. The capital account then is going to increase in the credit direction. So then the next one, the company paid $3,300 cash for insurance policy covering the next 24 months. All right, so is cash affected? Yeah, we paid cash. Cash has a debit balance. It's going to go down because we paid it. Therefore, I'm going to put cash on the bottom, and the amount will be for credit 3300, and we're going to debit something then for 330. And that debit, in this case, we paid for insurance. It's going to go to what we're going to call prepaid insurance. Why is it prepaid? Because insurance is basically always prepaid. We pay for it before we get to use it. We credit cash. Therefore, our T account is affected over here. We're going to say the credit is $3,300. Therefore, we have the $14,700 minus the $3,300. We are now at $11,400. Debits are winning by $11,400. All right. Now, you may also, if you have an Excel or something like that, you could try a running balance, or you could just try to estimate how long this T account will be, and then you can try to plug it in this way. You could say the sum of the debits, all of these. I'm going to include all the blank cells. So when I include more numbers in the blank cell, we'll see the change in the debits and the credits. And the sum of all the credits, again, I'm going to include everything. And therefore, the debits are winning at this time of $14,700 minus the $3,300 plus the negative minus the $3,300. So $14,700 minus $3,300 is $11,400. So that's where we're at now. So then the next one says the company received $6,900 cash for services provided during January. So is cash affected? Yeah, we received $6,900. So remember, cash has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So I'm going to copy the debit. Going to put it on top because the debits traditionally go on top. And we got $6,900 in this case. The credit will go to some type of revenue. Revenue is going to increase with a credit. So we're going to credit revenue in this case, and we're going to say credit of 69. And that will also go in our T account because cash is affected. We may even want to highlight where the cash is affected. So if we made an error, we can go back and say cash is there, cash is there, cash is there, and cash is our T account that we're going to. So cash is here, and there's a debit of 69. So we have 14.7 debit minus the 3.3 plus the 6.9 gives us the 18.3 at this time. So next one. The company purchased 7.4 of office equipment on credit. So is cash affected? No, we bought it on credit. Again, if you want to know what the journal entry would be, it would be something like equipment would be debit, increase in equipment, and then maybe accounts payable, AP, or something like that. So the company purchased the equipment of 7.4, so no cash affected, no green there, no effect on our T account. Therefore, the company provided 3.950 of services to customer on account. So again, on account means that we billed the client. We did work, we earned revenue, billed client, no cash. What would the journal entry look like? AR would go up, the receivable. It is an asset, but it's not cash. So the receivable would go up, and we would credit like income or revenue. And there's no cash affected. So how much was that for? The company provided services to customer on account 3.950, credit 3.950. Then the company paid cash 2.700 for monthly rent. So is cash affected? We paid cash, keyword. So cash has a debit balance. We need to make it go down because we paid it. Therefore, we're going to do the opposite to it as what it is. It's a debit. We are going to credit it. So I'm going to skip a line, put it on the bottom. We're going to credit, and we paid for rent expense. Rent expense, and then the rent was 2.700 and credit 2.700. I'm going to make this green, indicating that we again hit cash. Therefore, it's going to be included in our T account on the credit side. And that means that we have this debit minus the credit plus the debit minus the credit gives us that 15.6, or debits and credits, debit minus the credit, 15.6. All right, next item we have the company paid for 3 on office equipment purchase in transaction 5. So we paid part of this purchase of the equipment that we purchased on accounts payable. Is cash affected? Yes, it's going down. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, crediting it. Therefore, we're going to go back over here. I'm going to skip a line, skip another line. We're going to credit cash, and we're going to debit accounts payable, reducing the liability. So that's going to be the debits and the credits on that one. And the amount was 4.3. And 4.3, I'm going to make this green, indicating that once again, that is a area where cash is affected. So it's on the credits side here, equals this item. So now we have debit minus the credit plus the debit minus the credit minus the credit gives us 11.3, or all debits, all credits, debits minus credits, 11.3. Next item, paid 3.95 cash for January utilities. So is cash affected? Paid, yes. Therefore, cash is a debit balance. We're going to make it go down, doing the opposite thing to it, which in this case be a credit. Credit being down here on the bottom of here. Well, I'll find the number in a second. And we're debiting utilities expense. Utilities. All right, something like that. And that's going to be 3.95. And we will credit 3.95, and then we're going to make this green again, indicating that we're going to credit that. And somehow I made just the perfect amount of space in our T account here, just because it was just perfectly done. And then we're going to say the 3.95, and then now we can see that would be our ending number here. So again, debit minus credit plus debit minus credit minus credit minus the credit gives us the 10.905, or total debits, total credits, debits minus credits gives us debits winning of 10.905. Now, of course, if you have a time constraint on this, you may not want to write the entire journal entry. You can basically do this one, of course, by saying, did we receive cash? Every time the keyword says received, cash, then we're going to debit cash. And every time it says paid, that would mean the cash would be going down.